Hey traders, Akil here. Welcome to today's edition of the Trading Blog. Don't worry, I'm not driving, just about to head out. But I want to give you guys a quick video today. Interesting day. Woke up about 3 o'clock this morning, just couldn't sleep. Mind was racing, so I decided to head downstairs and hang out with our London live room traders. You guys know that I host a live trading room. We also have a London live trading room as well, hosted by our trading coach, Jason Greystone. So it was fun popping in there. It's always a great time. I don't get to see those guys too much because of the time difference. So it was awesome to hang out, be on the other side of some analysis, meaning instead of me doing the analysis, I get to sit back and see some different perspectives from another trader. It's always really great seeing Jason Greystone just grow and develop as a trader and really as a trading coach as well. He is fantastic. Today was a non-farm payroll, so we didn't do much in the live room, just a little bit of Q&A, and that's what I want to share with you today. We had an interesting non-farms. We had a great number for the actual non-farms report. However, we did initially see some dollar weakness, and some of our live room members were a little bit confused. We always talk about how good news doesn't always mean a good reaction, bad news doesn't always mean a bad reaction. So we had a little bit of a conversation about interpreting the news and kind of how to be aware and of what news events will move the market. And for you guys that saw the movement this morning, the negative reaction was due to the average hourly earnings. But I'll share with you a clip from today's live room, and then I'll be on my way for the weekend. I'll see you guys Sunday with a FOREX market preview. Take care.
All right, so back to the conversation. We only know the number is going to be important after, or we only know which number is going to be important after it's proven to us from time and time again that it's going to be important. So it's kind of like we're always behind the eight ball. The only reason I knew that non-farm employment change stopped being important and average hourly earnings started being more important is after a series of events where the market stopped reacting to one and started reacting to the other. Does that make sense? For example, I remember probably 2 years ago, 2 or 3 years ago, when we were really down on jobs, right? Really down on jobs. And every Thursday we have unemployment claims, right? 8:30 in the morning, every Thursday, like clockwork. Every single Thursday at 8:30, unemployment claims would rock the market. Why? Because it was the most important thing. That is what people wanted to hear news-wise. What is our employment rate or in change? Unemployment rate, I guess. Right? So every Thursday it would come and boom, take off, boom, take off, boom, take off. And then it would come and do nothing. Then it would come and do nothing. Right? Same thing with non-farms. Right? Same thing with non-farms. For a while, again, when we weren't producing as many jobs, it was the number one number that could be released. It was, we got to see 150K. We got to see 150K. That's typically, 150K is typically the kind of like the break-even point. Like if you produce 150K, you're kind of keeping track with people coming into the workforce. So you want to see 150K, right? Everything above 150K was good. Anything below 150K was bad. And you would consistently see the market move. And then eventually, right, we started knocking off these months. We started seeing 200K, I think, 6 months in a row. It could be more than that. I don't know if any of you guys remember. I know you don't care about news much, but we started seeing 200K over and over and over and over and over again. And what do you think that symbolizes to the market? Things are doing good. Things are doing bad. What do you think? Good. So now the market has shown us that, hey, okay, well, the jobs number is getting better, but things still aren't good on the home front. And the emphasis shifted to, okay, well, we have jobs. We have enough jobs now. We're at the employment that we should be at. But what type of jobs do we have? We have a lot of very low paying jobs. So now the emphasis shifted to not the amount of jobs, but what type of jobs and the average hourly earnings. And now that's been the important thing. So the market's kind of numb to the good jobs number, right? And now it cares about average hourly earnings. Well, we want to see what type of good jobs we have, right? So that's kind of what we're at right now in recent times. And guess what? Who knows when this will change? A year from now, maybe we'll go on for a year, maybe in a couple months, the market will stop caring about this and it'll start caring about the unemployment rate again, or maybe more inflation numbers. But we don't know until it's happening. Now, is anyone asking themselves, how do I know about this? You guys know that I am very weak when it comes to economics and fundamentals and stuff like that. How does Akil know? Anybody asking themselves that question? Because you guys know me. I can't even spell fundamental or economic. Right? Two things, right? You just pay attention. Jason Stapleton program. There you go. That too. You pay attention to how the market's reacting, what the market's reacting off of, like today. And you read. So you read and you read and you read. And then you kind of take the knowledge that you got from reading, you look at it in the market, and you see what's going on. And days like today, Lisa, you jot down. You say, good non-farm employment change number. However, dollar weakness. And you look at what data was weak. Average hourly earnings, if I can get it out, was weak. Maybe that's what caused the dollar weakness, since obviously the other number was positive. You see how that works, guys? You put two and two together, and you just keep observing, and then you can start making these assumptions and predictions. Now, would I ever trade off of it? No, I wouldn't. But you can start having an idea of how you think the market's going to react and at least know what the market is reacting to. So that's the long-winded version of why the dollar went down with a good number. We still wouldn't be able to. Well, yeah, and I have no intentions of trading it. I would have no intentions of trading anything based on that. So I'm not even thinking of it in the sense of how can I execute a trade. I just want to know because I'm curious. It's something. It's always bothered me to. I'm from. I think kind of realistic, right? Good number should equal good result. So it's always bothered me in the market, right? It doesn't make sense when I see a good number and I see a bad result. I'm like, does not compute. Just what's happening? This isn't right, right? Good number should equal good result. That's logical. Market's not always logical, so that always bothered me, and it was one of those things that got stuck on my mind. Like I want to figure out why. So I just made it a goal. I'm in the markets every day. I talk to traders every day. I talk to many fundamental traders that are a lot better than me. And, I want to be able to understand what they're telling me or at least have conversations. So I just wanted to get better with understanding why, so I can at least have, not be confused when I see movement. Because the next thing you know, once you're confused, that usually ends up going to you're scared, right? Because when you're confused, you're uncertain. When you're uncertain, you're unconfident. When you're unconfident, you're usually scared. And that can lead to a whole nother path of mistakes. But I would tell you this. You can use it to your advantage. We've spoken in the past about, you guys remember the conversation we had about going for home run trades? Remember I told you maybe 3 times a year I go for that home run trade, the big trade that may yield 500, 600 pips. You guys remember that conversation? Right? Some of those home run trades, the extended target. Now, I want to make this clear. The reason for being in the trade is purely technical. The reason for being in the trade is purely technical, meaning something in my plan caused me to take the trade. But with some of those trades, if you happen to align yourself in the market with kind of the fundamental side as well. So let's say, for example, that you're expecting dollar strength and you execute it, a combined technical score trade, a CTS trade on the dollar yen, and you got long, right? You can kind of use that fundamental knowledge in the back of your head to help with those extended targets. You can say, hey, you know what? I'm in line with the underlying sentiment of the market. So instead of setting a a moderate second target, I'm going to go for a bigger one, or I'm even going to trail stops. I'm not advising any of you guys do that, but I'm saying that's what you can eventually shift to with that knowledge. So it's not useless. If you saw me at the beginning of my trading career, I would have told you the same. I was always saying fundamentals are stupid. Don't listen to them. But over the years, we grow. I think the most telling thing you can do as a person is, I'm a stubborn person, but I don't want to say admit you're wrong, but you can be open to change. And the more I grow as a trader, the more open I am to change because I see and experience things. Now, again, I would never trade off of fundamentals. I would never execute a trade off of fundamentals, just not my style. But I've seen the power firsthand in my trading experience, how when you could put the two together, you can put yourself in a very, very, very good situation, right? And I think back to my stock investment days. It's the same thing I did when I was a stock investor. I was purely fundamental, right? And I think back now and I'm like, well, if I had the skill of technical analysis back then when I was investing in stocks that I do now, how much better would my entries and exits be? I would be able to pinpoint the best entry. Oh, we have a pullback to this level, right? I have a bullish bias. I want to buy this anyway. I can pinpoint an execution point using my technicals. I wish I would have had that skill back then. I wish I would have had that skill. So you can use them. You can use them both together. That's the point I'm trying to make. But I don't base any decisions off of fundamentals. So I would never enter a trade saying, "Hey, I think there's going to be dollar strength based on this report coming out, so I'm just going to get long the dollar because of that." I wouldn't do that. But I have opened up to seeing how you can use both together. I do it rarely, but and create some very, very powerful things. And again, with the home run trades, you get one or two of those a year, you're set. You get a couple 500 pip winners a year, you're set.